Hello, I'm Dr. Cheryl Dunn, and I'm here to demonstrate a problem from a fictitious company called G. Lakers, Inc. for you today. In this problem, you are given a set of account balances from a company's general ledger at the end of its current year, and you are asked to calculate operating income, income from continuing operations before taxes, income tax expense, income from continuing operations, and net income. Take a look at the problem. Pause the video for as long as you need to read it. We're going to proceed as if we're creating a multiple-step income statement, although we're not going to make it formal and put a heading and everything like that. But basically, the amounts that we're asked to calculate are all subtotals or totals from a multi-step income statement, so we'll proceed as if we're making one of those. First, we'll list sales revenue, which is given as $95,000. Next, we're going to subtract cost of goods sold, which will give us a number that we call gross profit or gross margin. The cost of goods sold was $45,000, and that leaves us with a gross profit of $50,000. From that, we subtract our operating expenses, and in this company we have selling expenses, general and administrative expenses, which we often abbreviate as G&A, and then restructuring costs. Now, restructuring costs might seem like the kind of thing that isn't part of normal operations because it seems like a once-in-a-while kind of thing. But some companies, in fact, restructure themselves and incur those kinds of costs every year. So the FASB has decided that restructuring costs are going to be part of regular operating expenses. So in this company, the selling expenses are $7,000. The G&A expenses are $18,000. And the restructuring costs were $12,000. If we add those together, those total $37,000. And that leaves us with operating income of $13,000. Next, we take a look at other income and expenses, and those include things like interest, gains, losses, things like that. And we'll net them together to an overall other income or other expense. In this case, we have interest income of $8,000. Then we had a gain on a sale of an investment, and that was $14,000. And then we had interest expense for $6,000, which is going to be a subtraction. If we net those together, those give us a total other income of $16,000. That then leaves us with $29,000 as our income from continuing operations before tax. Okay, so far this is one of the numbers that you were asked to calculate, and this is the second number you were asked to calculate. Next, you're asked to calculate income tax expense, and that's going to simply be the $29,000 in income from continuing operations before tax multiplied by our tax rate, which in this case is 30%, and that will give a total of $8,700. So our income tax expense we would then subtract from that $29,000, and that gives us $20,300 as our income from continuing operations, which is the third number you were asked to calculate. From that, we then need to consider any discontinued operations. And in this company, it said that we had a loss from discontinued operation. So that's going to be subtracted. However, what we're going to do is we're going to net any tax benefit that we get from the loss against the loss itself. And so in this case, we had a loss of $21,000, but then we're going to subtract the tax benefit. And the tax benefit would be that $21,000 times the tax rate of 0.3 or 30%, which gives us $6,300. That decreases our loss overall because that ends up being $6,300 less in taxes that we're going to have to pay as a result. And so we subtract the tax benefit of $6,300, and that leaves us with an overall loss from the discontinued operation of $14,700. If we then subtract that from our income from continuing operations, that leaves us with net income of $5,600. And that is the final number that you were asked to calculate. So you had operating income of $13,000, we had income from continuing operation before taxes of $29,000, then we had income tax expense, I forgot to put an asterisk by that, of $8,700, then that left us with income from continuing operations of $20,300, and then down to net income of $5,600. That concludes this demonstration. Thank you for watching, and have a wonderful day.